900 plus point move in the Dow. Major averages down 3%. If you're not a trader or watching your 401k or other funds on a daily basis, that seems really startling and really scary. How would you put this into context?
It does seem, to look at it, it does seem a little bit startling, considering what we've been doing over the last 3 or 4 weeks, just marching to new highs in the face of all this. I would say to people, this is the last moment you should start to panic or get drawn into the chaos, right? Down 3%, yeah, it's a big move in one day. And if it stays down here by the end of the day, we'll have lost 5% off the highs of last week, which is still relatively, within the trading band. So I wouldn't overthink it. I would also recognize the fact that the automated trading and the algos take it up just as quickly as they take it down, except it feels a lot worse on the way down than it does on the way up. So I would sit back and relax, especially when you get a shock like this in one day. You got to let the market settle in a little bit before you have a reaction. The worst thing you can do is make an emotional reaction.
Greg, I want to get your thoughts on this move we're seeing today, too. Pullback, start of a deeper correction. What do you think is accounted for within the markets currently at these levels?
Yeah, well, I certainly feel a little bit less relaxed. I think that 35.25 on the S&P is a good level to watch. That was the January lows. I think if the market breaks lower through there, we could start to see a pickup in volatility and more selling. Coming into today's correction, we think there's quite a lot of leverage in the market. We look at things like the open interest in the futures, asset managers' holdings of futures are close to record highs. We think a lot of quantitative strategies, vol targets, CTAs, are all quite levered. So we do think if this sell-off accelerates, if we see another down day tomorrow, we think that could spark further selling and more volatility.
Right.
Go ahead, Kenny.
I was going to say, look, Europe just closed and the U.S. markets got weaker after they closed because they closed more on the lows of the day than not. And Greg's right. If we see our market fail into the end of the day and close closer to the lows, that just sets it up for another down day tomorrow, which is why I just said, don't make an emotional reaction. Don't just jump in right now. Let it play out for a day or two.